Welcome to Investing with IBD, sponsored by Vantage Point. I'm Justin Nielsen, your host. It is Wednesday, August 18th, 2021, and I'm also joined by my special guest star, Arusha Peiris. He is the / to my Axl Rose. He is an O'Neill Global Advisors portfolio manager. And also on the show today, we are delighted to have Chris Gessel, the Chief Content Officer of Investors Business Daily, my boss, the person that I probably spend the most time on the phone with on a daily basis. Chris Gessel, welcome back to the show.
It's always great to be with you guys.
Yes, so especially with me, you're like, yeah, you're with me a lot, which is unfortunate. So
yeah, I always like to see someone sucking up to the boss. So
how was that? Did I do good?
That's pretty good. Yeah.
When is my next review? That's coming up soon, isn't it?
So maybe after the podcast.
Probably. Okay, perfect. Okay. Well, gosh. And by the way, you're looking so young. I have to say. So right. On today's show, we are, of course, going to talk about the market, and there's a lot to talk about there. This last few days has been a rough one, but we'll talk about whether or not this is a pullback or something more serious. We will also get into one of Chris Gessel's favorite topics, early entries. So we're going to be talking about reversals, breaks of downtrends, bounces off of moving average lines, tight areas, and even using intraday charts. So we're going to spend a little bit more time on that segment. And then as always, we'll also talk about a few stocks that are on Chris's radar. It's a little bit slim pickings right now, but we'll look at as much as we can. So Chris, why don't we get started? And maybe Arusha, do you want to pull up the NASDAQ composite? We'll show Chris that. And Chris, what have you done to the market lately?
Well, yeah. What was interesting about today's action was we took out the low from the day before. And so, we had, especially on the Qs, if we could go to the Qs, because
that's your favorite instrument.
Yeah, it is my favorite. Mm-hmm. So, we had the reversal on Monday, and then we tested it again yesterday, which we didn't expect that. That was an expectation breaker, as you were saying.
Yeah, that's not how you usually see a reversal play out. You expect it to go up a little bit the next day, and there we were undercutting the day's lows. So.
Yeah, ideally, if this had been like a normal reversal, we would have, even if we had undercut the day and the low in the morning, it should have closed above Monday's high, and then that would have been really powerful, a big outside day. But no, it was decent, but also an expectation breaker. And then today, especially at the end of the day, we just took out the lows from yesterday. So now it looks like the next stop on the Qs is the 50-day, and if we look at SPY, I think we're pretty much in a similar situation.
Well, so for SPY, it just kind of got to the 21-day moving average line, just broke it for the first time today. It looked like it had gotten support yesterday, and it really had gotten support at the 10-day on Monday. So it really wasn't giving up as much ground as the NASDAQ. But it certainly was looking a little bit more poor the last couple of days. And, the Dow Jones Industrial Average, both the S&P 500 and Dow Jones Industrial Average were in new high territory on Monday. It was a closing high for both of those indexes. So they're not off as much, but the Dow Jones Industrial Average is also now trading below its 21-day moving average line.
Yeah, so if we come down to the 50-day and reverse, there should be a lot of setups that could start as swing trades and then maybe turn into position trades. We definitely saw that a couple of weeks ago, kind of mid-July, just lots of setups that turned into great trades there. So, these pullbacks, they're not a lot of fun while they're going on, but they do give you a lot of opportunities if they unfold the way you expect them.
Yeah, and that's one of the things, Arusha, you were talking about, how we needed the pullback, but it's not fun to sit through, right?
Right. Yeah, it's never fun to sit through. And we're also in August. For me personally, July is always the trickiest month, but I think for a lot of people, August is the trickiest month. And So you'll have some kind of pullbacks like this, but what I'm still clinging on to hope is that we're setting ourselves up for a fall rally here. But that setup hasn't been very fun, especially the last few days.
Mm-hmm. And just to kind of reverse back in time a little bit, if you pull up the NASDAQ, Chris, you were mentioning the last reversal that we had, and this is the last time we went below the 21-day moving average line on the NASDAQ composite was this 19th, and we'll be talking about this day, July 19th, in our second segment. But again, what we've been seeing for the most part is that the NASDAQ has been getting support fairly quickly. The S&P 500 again hasn't really given much ground. A lot of times these pullbacks, it feels like the buy on the dip mentality is so strong that the pullbacks don't last for very long. You get a few days down, and then you're right back into new high territory in short order. But eventually, that trend ends, right? So how do you gauge when you might be in the later innings of the game as opposed to this is just a seventh inning stretch?
Well, I think we won't see setups that stocks aren't showing the action that we typically want to see. That was the case yesterday, and in even the day before, where we're kind of scratching around like, what is there to buy? Nothing was setting up. Mm-hmm. And then the other thing is, if it's really not going to work, you'll probably know by the next day. If you have a good day where everything looks like it's back to normal, and then the market just really cuts through the moving averages, and the fun is over. Like what happened actually in late April and May. The NASDAQ came down, got support, gapped up, and then absolutely cut through the 50-day moving average and pulled back. But the good thing about that is that set up a really nice run. Mm-hmm. That was a fabulous run. I made a lot of money during that period. So if you can, sidestep some of the damage when you're having a correction like that, and that wasn't that big of a correction, but it hurt at the time, you can really make a lot of money on the next uptrend.
Right. And for those that don't know, TQQQ is, of course, the triple leveraged of the NASDAQ 100, the Qs. So it basically does 3 times on a daily basis whatever the Qs do. And of course, what was really striking about that move that you're mentioning from the April, May undercut of the 50-day is that it was really led by a lot of the big cap names, the $1 trillion club, where the breadth wasn't there. It was a little bit tougher. You're looking at all these other stocks, and if you didn't have the big ones, your portfolio might not have been doing nearly as well as the indexes. So sometimes nabbing the index, especially on a leverage basis, can actually do a lot more for your portfolio than an individual stock.
Yeah, because during this run up in the indexes, the advanced decline line was going sideways to lower. So that there just wasn't a lot of participation with the move. Like you said, it was the $1 trillion club.
Yeah, and speaking of participation, that hasn't really improved during this whole time, right? So that is one concern that I have. That underneath the surface, even during this whole run that we've had the last month and a half or a couple of months, you just haven't seen that broad-based rally just yet. And and that could be a little bit of a warning sign that maybe you have a little bit more of a correction coming in if more stocks start to fall. The few remaining stocks that have been doing well, if now they start to break some key support areas.
Right.
And Chris, does the Russell 2000, that has certainly been the laggard index lately. It hasn't been able to get back above its 50-day moving average line. Does the action there give you any cause for concern that that this has been lagging for so long? And usually when people look at the Russell 2000 not doing so well, it's usually more of a risk-off environment. But the NASDAQ was giving us a completely different signal, so this was kind of the outlier. How are you adjusting for that?
Well, it's still, it still seems like when the Russell is having a bad day, a lot of times our types of stocks aren't doing as well as they should, even if the NASDAQ is up. So there is still that kind of risk off feeling when it's not participating. And I think that's why, that run up from May to, into July in the NASDAQ itself, underneath that, there were just, again, the Russell kind of shows how it didn't really participate. And there were some, fairly hard sell-offs along there. So that does bother me. And we see that, now it's testing its 200-day moving average. And that too, to Arusha's point, boy, if that one, rolls over, maybe usually the Russell doesn't really pull the market one way or the other, but it certainly kind of lends a cast to the market. So that would not be good.
Yeah, and another gauge that you can look at is just the ARK investment stocks, the ARK-K, the ARK Innovation ETF. This has been struggling for most of the time, but you can see from the May to June at least, it had a little bit of a run here, but still been struggling right around that 50 and 200, and it's below it right now.
So one last question before we wrap up this market segment. Is it time to short? Is it an area where you think shorting makes sense, or is it too soon?
I mean, if you've got some stocks that you're really focused on and maybe they've broken below the 50-day and they've come back up and they're starting to roll over, that might be something you could do. But in general, it seems to me too early to short. I mean, shorting really works in the same way when you go long, it really works when the market's in a defined uptrend. And we're not in a defined downtrend right now. So there, maybe you can find some very targeted shorts, but I wouldn't just go, all of a sudden go 50% short and just trying to find anything that you think is showing weakness.
Perfect. So after the break, we're going to go ahead and talk about some of the early entry opportunities that this market has offered and why sometimes that's preferred over breakouts. Stay tuned. Kicking yourself for that early exit? You can prevent them, and it's easier than you think. Go to freestockcoaching.com to see the tool independent traders are using to perfect their trades: artificial intelligence. AI doesn't involve staring at your screen for hours, and no research is needed. Just pick a stock and press a button. Visit freestockcoaching.com to see a live demo now. You need to be ready for rapid market changes, and AI can help you avoid potential losses. Check out freestockcoaching.com to learn more. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Okay, welcome back to Investing with IBD podcast, sponsored by Vantage Point. I'm Justin Nielsen, along with Arusha Piras, and our guest today is Chris Gessel. So Chris, one of the things that we've been doing a lot together is working on these early entries, especially helpful when you're doing swing trading. So maybe talk a little bit about why early entries are so appealing to you and why you've kind of shifted your focus to those above breakouts even.
I used to be not so worried about my entry, and sometimes I would intentionally wait till later in the day because I wanted to see, is the volume really there? Is it, and I'd like, the stronger and bigger the breakout, I'd feel more comfortable. And at times, yeah, you'd be underwater, but it ultimately what I was finding is I would get into better stocks by waiting and buying at a higher price. I've gotten a little less patient, sitting with some of these, but especially in this market this year, if you're not picture perfect with your entry, you're probably going to get shaken out whether it's a week later, a month later. It just hasn't been the type of market where a big breakout just continues going. We've seen so many big moves, all of a sudden they just kind of falter, they kind of start going sideways. And so I've become much more focused on the early entries. And as you were saying, in Swing Trader, it's making a huge difference, because if you get in a day earlier on a swing trade, that often can be the difference between a winning and a losing trade. So it just, especially in this market, it's making all the difference to get in as early as possible.
Yeah, so maybe we can start by showing some examples of this to illustrate the point. And so for those of you that don't know, we will have the video portion of this available if you're listening to the audio, or you can just kind of follow along when you're listening to this and maybe pulling up some of these charts at home. But let's go ahead and start with Shopify. The ticker symbol on that, of course, is SHOP. And this is one that we've been watching for quite a while. So maybe walk us through where the early entry was on this rather than waiting for that 1500.
So in the base that started, I guess, in late February or mid-February, and when I'm screening over the weekend, I'm always looking at the bases and saying, okay, is there a trend line in there? Can I connect some dots? So if you start at 1499.75 there, and then pull that down towards 12, I guess 1280.99 or whatever that number is. Yeah, so there you go. You're touching what, 4 or 5, maybe even 6 points on the chart. So that feels pretty good that there's a good trend line, in the making, and then you see that big day where it really pops above it and closes right at the high. And so that was 614, wasn't it? Right. So now take a look at it. So if you bought on that day, and even at the end of the day, that's the one thing I like about the trend breakouts, because they're like the breakouts right now, where you maybe sometimes you can wait, but the fact is, if the earlier you get in, the better. Maybe wait until 30 minutes into the trading session, or maybe an hour to pull the trigger, or you can start, early on if it breaks the trend line right near the open. But you might want to scale into it so you don't, it lessens the chance of getting hurt in a reversal. But look what happened with Shopify. So it just powered up after that, and it's basically going straight up the right side of the base, and then it pokes above the conventional buy point there. And what happens? It reverses that day. So if you miss that early entry and you bought as it was going through the left side high, you're underwater the very first day, because it reverses. And then what happens over the next few weeks? Well, it goes up and down and back and forth,
just
and it even
struggle.
Yeah. And it even at one point falls more than 7% below the entry, reverses from that, and looks pretty good. But now we're in mid-August, right? So it's about maybe about 2 months since that breakout, and you've made zero headway on this. Now, if you bought back, around back on the 14th, maybe you got in around 1300, or actually probably a little less than that. And so you've got a good profit where you've been able to sit through this, because it hasn't done anything terribly wrong. It's, testing your patience, and now it's coming into the 50-day moving average. And maybe this might be the spot where it gets support and really powers higher, especially if we can pull back in the market and turns around. So maybe draw another trend line on this from 1650.
And hitting a few of those tops as well.
Exactly.
Yeah, so one little outlier there that kind of gets above it.
Too bad. Arusha, who is the chartered market technician, is it okay to have a little spike above a trend line like that?
Yeah, it is. It's fine. You want to capture most of the resistance on it. That's kind of the core concept of it.
Right. So this I think is just like a great example of where an early entry made all the difference versus the conventional entry.
Yeah, and Arusha, correct me if I'm wrong, but weren't you talking about this on IBD Live when this was coming up above the 50-day moving average line? So a little bit earlier. Was that a place that you were talking about it?
I was probably watching it, but well, I bought it exactly at the same time that Chris was talking about it. I wasn't necessarily using the descending trend line. I was using more the fact that I was getting above the 280 level and the 1301 level. And so a lot of times, especially on these market smith charts, I like to use the little prints, the short-term prints that it puts, because the way it does it, it's 8 days before and 8 days after. If that's a peak or a trough on it, it's going to put those numbers. And so I like to use that kind of as a short term, because that's almost in many ways that could sometimes be like a 20-day high, 25-day high, and so those can be significant because there's usually that's almost a month of trading going on, and so taking that out can be significant.
Yeah, absolutely. Yeah, we found that in market school when we were doing our studies. Charles Harris, Mike Webster, and I, that those prints are very useful in terms of both support and resistance. And so that's good to note. Let's go ahead and shift our attention over to DocuSign. The ticker symbol on this is DOCU, and this is another one that I feel like we've been talking a lot about, and especially on this one, Leaderboard got an early entry on this off of this earnings move, and that really made the difference in being able to get a nice gain out of this one.
Yeah, and the other thing about this is pattern rec is great, but you need to look within the pattern, within the base itself, because this shows a big consolidation that started in late August, September, and at least according to the pattern rec analysis, didn't break out until July. But if you look within that base, there's a double bottom that formed there. And that's what David Chung and Ken Shreve were looking at, and they actually were analyzing it with taking the if you start at 275.46 and then draw down through the middle high of the double bottom, and so
at on 236.11.
Yeah, so on earnings it gapped up and just kept running. And how much was it up that day?
It was up almost 20%, 19.76%.
Right, and they, I think they probably activated it about the time it took out the 200-day, so they weren't buying it first thing in the morning. They, it was fairly. It was at least I seem to recall it was at least midday. And when you see, again, when you're breaking a trend line, earnings, a nice earnings gap, even though it was within the base, and it's just showing that power, they went ahead and put it on, and it just took off from there, held the 21-day for the next month, and then poked above the left side high back in right around the beginning of July, right? And what has happened since then? Well, it's been up and down, and like with Shopify, you're basically at the same point that you were 6 weeks ago.
Mm-hmm. So I actually looked it up, and it looks like the alert came out roughly 45 minutes before the close of the market session that day. So it was at the end of the day. So a lot of that action had happened already,
right?
As you mentioned. Now there was another entry on this that we were talking about. Yeah, so maybe you could talk about that one a little bit.
Well, that low at 270.41, right there, exactly. So the market was pulling back, and DocuSign came down and actually reversed. But on that day, the S&P and Dow were S&P and Nasdaq were still down for the day. They were falling. They closed lower that day, and so this was just amazing that we were seeing the strength in this stock when everything else was really getting hit hard. And so we put it on Swing Trader kind of again late in the day because it was holding up, and it turned out to be a really nice swing trade. Went up, went up all the way to 310 or so, and I don't remember exactly when we got out, but that was, that really helped make our month, because there were a lot of trades right around that time that were acting like that.
Yeah, so July 19th, we talked about that being a big day, but this one was actually July 15th that it had that reversal. So yeah, it kind of stuck out on that day.
Yeah.
Do you want to talk a little bit about Nvidia? We've got earnings on that one that actually just came out as we were starting our podcast taping here, and it looks like the conference call is going on currently. But this is one that we've had this on leaderboard since April of 2020. It really kind of didn't do much for a while. In August, it started kind of just flattening out for a long consolidation there, but it's offered a number of opportunities lately.
Absolutely. And in that base that was taking shape in May, there's a very clear downtrend within that consolidation. So it tried to break out, pulled back, came down to the 50-day, and then retook the 50-day. And I believe that was on
May 20th.
May 20th. So really nice entry. So, there's two things that we like about that. One, that it's breaking a downtrend line, and it's retaking the 50-day. So two elements of an early entry that we like a lot. The one thing that was difficult about entering this trade was earnings was, about a week away at that point. And so we're always skittish about looming earnings on swing trader, because we always say, well, do we have enough time to have enough cushion? Or, we don't typically hold through earnings, but a lot of stocks don't rally into earnings. That's not a typical thing. But we were talking about this on IBD Live, and on Leaderboard as well. And so what was really great about this, if you got into this by the time earnings were reported the following week, you had about a 7.5% profit, and that's buying at the close of the day. And given that Nvidia usually moves around 5% or so around earnings, that's enough profit cushion to hold in. And it didn't do much the next day after earnings. It was down a little bit, and then it came back and started running. And again, it was a great swing trade that could have been turned into a position trade that continues to work to this day. So it makes all the difference. You just, when you have the profit cushion, even if it's, an extra 5 or 10%, it just makes it so much easier to sit through the next correction when it comes back down to the 50-day.
Yeah, perfect. So we're going to take a quick break right now, but when we come back, we'll get into a few more examples of some of these early entries, and then we'll also talk a little bit about some stocks that might be setting up right now. So stay tuned for that. Why trade off hope and optimism when you can trade using the world's most powerful indicator? Artificial intelligence has been used by traders to navigate the markets for the past 3 decades. Visit freestockcoaching.com to see the world-leading AI forecasting software for yourself. Trusted by more than 32,000 traders, AI uses millions of data points to track market trends, giving you the support you need right now. Go to freestockcoaching.com and we will help you find great opportunities today. Our experts will show you what stocks are setting up for big changes right now. So head over to freestockcoaching.com for a free demo. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Okay, welcome back to Investing with IBD, sponsored by Vantage Point. It's Justin Nielsen, Arusha Paris, and our guest, Chris Gessel. So Chris, you were talking about some of these early entries. We've been showing a lot of examples. So again, make sure you check out the show notes or watch the video portion of this so you can kind of follow along at home. But let's go ahead and get into another example. And this one is one that caught our attention on that July 19th break of the 21-day moving average line on the NASDAQ. It's CloudFlare, ticker symbol NET.
Yeah, and before we get into that, I should just mention that I do own shares of the previous stocks that we talked about, DOCU, Shopify, and Nvidia.
I have I should disclose that I have DocuSign as well, Nvidia, and since we're talking about CloudFlare, I own a little bit of that as well.
I sold those stocks this past week.
Okay, well,
and bought a house.
Well then I'm selling them right now if they're not good enough for Chris. So let's go ahead and talk about CloudFlare. This is one I've actually been holding on to for a long time. So I actually have had to sell it a couple times so we could put it on Swing Trader, and then I buy it back after our 30-minute restriction. So last time I bought it, I think, was after that 30-minute restriction on the 19th of July.
And this is a great example. So this wasn't a trend line within a base. It was a pullback to a moving average. So again, in July, the market's selling off. It comes down, gets support around, what is that, 99.51. Mm-hmm. And so this is a down day in the market, and it's going up. And again, that just, those elements of strength, when we see them, when everything else is, getting hammered in the stock market, and this stock is reversing and showing real strength and retaking the 21-day moving average, that always really catches our attention. So we jumped on that. And again, you could have waited a couple days and said, well, does it really, can it hold it? Or when it takes out the previous high. But by getting in that first day when it's showing the strength, it just adds to your profit, but also makes it so much easier to sit through any pullbacks. In this case, there weren't any pullbacks until like a week later. It just kept going.
Yeah, and Chris, now the stock on the 19th of July, it undercut. First, it broke the 21-day. It undercut some other short-term lows of trading the few weeks before. Right. Just talk about the concept of just shaking out, why that is healthy for stocks, and why, to get better at investing, or especially our style of investing, you want to be aware of that this could be an opportunity. I think just taking a step back to explain, especially for those who are a little bit newer, why shakeouts can be healthy as long as you're not the one getting shaken out.
Well, that's that's the skill that you when you first start, you're probably the person getting shaken out. Right. Mm-hmm. And as you get some experience and see how things work, then you can take advantage of these. So yeah, you can see right around maybe a little above 100. There were 2 or 3 days in the prior weeks where it came down, reversed higher, and then a week later did it twice and kind of held in that area. And so on that big reversal day, it was down well below that and undercut 100. And so now that's probably at a point where people are, they're looking at their screens in the morning and say, oh my God, it's taken out that support. This thing is broken. I'm getting out. And that's why we often wait. What we often say is we're looking for a close below a prior area of support, or at least, convincing action below it. And that's why if you can wait that 30 minutes or an hour into the market before starting to make any moves, a lot of times, especially when the market's, in a normal pullback, in an overall uptrend, you will see the stock come back within, usually within the first hour or so. Do you guys have a timeline that you typically, if it doesn't, reverse by 2 or 3 hours into the trading day, is that a problem for you?
It can be. It really just depends on how emotional and how I'm doing so far, with the year and all that stuff. I can get a little bit more jumpier, and I could be the one who sells right at that 99.51 area if I'm already trying to not to dig myself too much more into a hole. What I've definitely tried to do more this year, especially when the markets have gone choppier, is I don't even try to watch it that much for those first few hours. Then I'll take a quick look and see, okay, is there anything really blowing up? And then closer to the end of the day, that last hour, then I'll see, okay, did it come back or not? and that's helped me stick with some of these a little bit more, or help me get into, I didn't get into the Cloudflare, but other kind of upside reversals, like a setup like we're looking at Cloudflare right here.
Well, and it feels like a lot of times what happens is you'll kind of get that initial shock and awe at the beginning, but then a lot of times it'll just kind of flatten out, it'll hover. So a lot of times just by putting a low at the end of the day, you can kind of see, okay, does it ever undercut that? Or sometimes you'll see kind of a strong bounce come in and it never looks back. It'll go up and then, maybe it pulls back a little bit, goes up some more. But by kind of putting that line in the sand at the low of the day, maybe just even in the first half hour or hour, you can see if it ever undercuts that. If it does, sometimes it's a touch, and then it comes right back. Sometimes it's really going through it, and then I feel like that's where I get a little bit more nervous and feel like I have to do something. But as Arusha says, a lot of it depends on so many other factors. Where are you in your year? Where are you in that particular stock? How much cushion do you have left? Are you on the edge of turning a profit into a loss? Because then that changes everything. But my number one rule is I just do what Chris tells me to.
Well, and but in all seriousness, it's a good reason why not to use hard stops on stocks, because that's what they do. They they come down, they knock the people out with the stops and then turn around. So that comes up a lot. That it's if you can avoid using a hard stop, and I know sometimes people, maybe they're on vacation or they're away from the market and they want to put a stop in there, but there's just so many times where the morning action looks completely different than what happens in the afternoon.
And we say that so many times on IBD Live. It's not how it opens; it's how you close, and that can be of the day, but it could also be of the week.
Exactly.
A lot of times, when you're looking at these breaks of the 10-week moving average line, that happens maybe early in the week, but by the end of the week, man, it's like a blip. And again, sometimes stepping back, it can be real easy to look at those intraday charts and maybe get a little too focused, like, oh my gosh, it's crashing. And it's like, no, it's not crashing. It's, Shopify's down 5 points on a $1,500 stock. That's really nothing.
Right? Yeah, it's a lot of times what I try to tell myself, especially if we have a sell-off on a Monday or a Tuesday, is, okay, it's early in the week. By Wednesday, you should start seeing hopefully a little bit of a turnaround. And then Thursday and Friday, they can really bring it back up. And it's amazing at how that will keep you in stocks. So that's something to keep in mind. But of course, if you're down that 8%, if you're hitting your true kind of stop where you have to manage your risk, then it doesn't matter whether it's the first minute on Monday. I'm going to cut my losses and protect myself.
So let's go ahead and shift gears a little bit to one of our long-term leaders. This is MSCI. And usually for our long-term leaders list, we talk about wanting to get these specifically on pullbacks. We don't want to necessarily be buying these on breakouts. So maybe talk about MSCI. This is one that, Chris, you and I, we talk about this every week in our long-term leader discussion, but man, I didn't catch it. What sticks out on this one to you?
Well, the fact that it came down and it reversed off the bottom at 443, and that could be an entry as well. But what we were really focusing on was it came up and then it just went sideways and got really tight. And anytime you see a stock getting support, and as it moves sideways, it gets even tighter. That is just like a big siren almost, that there's if it moves, that could be a really good trade. So we love seeing the tightness. Some people call it a squeeze, but when it breaks out of that consolidation and starts moving, that's the time to jump on these. And again, in this case, it was coming right off the 50-day, which again for long-term leaders is good, because look at this chart. This stock has the habit of it breaks out, runs up maybe 5 or 10%, and then goes into another consolidation. And that may seem like painful action to sit through, but then why don't we show a monthly chart of how the stock looks? And that is a completely different looking chart where, yeah, it's a stair stepper, but it's a stair stepper to heaven, and it just keeps going. So, this is a stock that went from about 35 to 800 since 2013. I'd take that.
If you're into that sort of thing.
Right. And the whole reason we came up with this concept is because we would go back and look at stocks that we had on leaderboard, and they were just so difficult because they didn't seem to be moving that much. But what happens is these small weekly gains turn into huge moves over many years.
Yeah, and on this monthly chart, that relative strength line,
right,
it's been outperforming since 2015. Essentially, it's just been constantly hitting new highs. It's a pretty amazing move that's really gone underneath the surface too. And the other kind of interesting thing, I just switched back over to the daily chart, is after that breakout or that emergence on 610, today is the first close below the 10-day moving average. So it's been over
it held
2
the 10-day.
months. Yeah.
Let's maybe shift our attention from this one, which again seems like a stair stepper. It's slow, it's like watching paint dry, to something with a little bit more heat, and that's BioNTech, which also came out on the same day that DocuSign did. It had a bounce on July 15th from a moving average. So maybe talk about this one and how this one held the 10-day moving average line as well.
Yeah, an amazing move. So again, you can draw the trend line. So it was building a base, and very, quiet action. Just in general, the volume during that pullback was lighter than the run up before it started consolidating. So that's exactly what you want to see. And then it poked above the moving average and the trend line. We got into it on Swing Trader that day, and I think that leaderboard might have gotten in on the breakout a few days later. But the fact is, we did not expect this move. And that's what's nice, is sometimes when you get in early, you just get an even bigger move than if you had bought it later. And what really got our concern is all of a sudden it was acting too strong, and we were nervous that there's no way this thing can continue higher, and it just kept going. The nice thing about leaderboard, because they're looking for more, they want to hold a stock for weeks, some months, or even years, whereas we're looking at days to maybe a week or two. This one just went into what looks pretty much like a climax run, and leaderboard didn't get the top, but they got it. Still had a nice chunk of that run.
Yeah, absolutely. So let's go ahead and now shift our attention to maybe some stocks that are setting up for potential early entries. And why don't we go ahead and start with Academy Sports. ASO is the ticker symbol on this one.
Yeah. So, I mean, I always, especially when you've got a stock that's had a great move already, it's shown itself to be a leader. Academy came public, around, I don't know, $13 or something like that. Maybe it was a SPAC. So, and now, it peaked at, over $40. So it's had a really nice move this year. And this is its second base since making that move. And if you take why don't you draw a line across that base? And again, like when I'm doing my weekend, screening, I'm always looking where is the resistance, and as David Ryan says, just draw the line. So where you're drawing, there's definitely resistance sideways there, and then you can also draw a downtrend within the base, and that's a little steep. So I'm looking at, yeah, that's the one I've got right now. So what would be interesting about this is if it can really break this downtrend with some vigor, it might still be below the 50-day moving average. So maybe you don't put a full position, but you're getting an early entry on the early entry, which would be taking out the 50-day. So it's like it's a double. And maybe this is not the market to be doing it, but
or it might be the market to do
if we get a turn,
right?
if we get a turn in the market, then again, the whole idea is that you have some of these on your radar, because it's so easy when the market gets a little foul, you're so focused on defense and you're, what do I need to sell, that you forget sometimes to be looking at those screens of, oh, what is potentially setting up to buy.
So this definitely gets my attention. I'd love to see it, unfold the way that I'm envisioning it. And if it doesn't, you cut your loss and you move on. There's not all of these work, but the ones that do work really make up for the few that don't.
So no doubt one of the things that has been a big mover for the last year almost is energy, and specifically the oil stocks. So talk a little bit about Targa Resources, TRGP, that has been on your radar for a while now.
Yeah, we've been talking about this because it's on our swing trader watch list, and we've been following it. And if you let's look at if for people who can't see the chart, it's come down. It was below the 50-day. It's gotten support, and it retook the 50-day, and now it's back below it, but not too much. Now let's look at DENBURY, another big leader, and probably
and DEN
the poster
is the
child
on that.
Yeah, the poster child of boy, don't you wish you had been in this?
Unbelievable. Yeah,
went from 20 to 80, since November. So this stock is much further below the 50-day, and it's gone up a lot more. It's going to have maybe a bigger, wider base for a while. But if we go back to Targa, it just seems a lot more normal. If you were looking at Targa and you didn't know what else was going on in the oil market, you wouldn't say, "Oh, wow, the oil stocks must be getting killed." This just looks like a normal base.
Right.
So with that trend line, if it breaks that trend line, it would almost assuredly be retaking the 50-day moving average. So again, you're getting the 1-2 punch of two types of resistance, and institutions are looking at that too, and then they'll come in and really start pushing it. And ideally, you would be up near 50 within a few days.
And you could easily see this, potentially breaking a downtrend on the relative strength line. Is that something that you ever use too much? Just kind of drawing a trend on the relative strength line.
I do sometimes, especially in the bigger, longer, deeper bases where you're trying to, okay, is it really doing better than it has over maybe recent weeks or recent months, even when it seems to be a really weak relative strength line, and then you draw that trend line on it, and it's like, oh, okay, well, it broke it a week ago, so that can be a good little tell that maybe this is really getting ready to move.
And any advice on using intraday charts? Because I know that's something that you like to do too. What kind of timeframes do you like to use there?
Well, we often use 60-minute and 30-minute charts, and it can get you in a little bit early. We're not necessarily looking for the pattern on the intraday chart, but once you see the pattern on the daily chart, then you go to the intraday chart, and it's like, maybe there is a little area of resistance that if it takes it out, you could actually start building a position before it takes out the trend line, or you're getting it right away because you can see that there's a lot of volume coming in compared to the spikes that you've seen in recent days and weeks. So it can really be, it can give you the conviction to take an even sometimes slightly earlier entry.
Yeah, well, this has been a lot of great stuff. And while this might not be the market for you to use some of this stuff immediately, I think you want to just really kind of flag these ideas, because eventually the market will reverse again. And this is exactly the kind of stuff that will help you be ready for that next pullback / reversal / uptrend that the market has. So thanks a lot for those tips, Chris. And thank you, Arusha, for being with us once again. And I guess, Chris, I'll talk to you tomorrow, huh?
For hours.
For hours.
Remember to bring him some bagels.
Okay. So next week, we're going to have on the show Pedro Palandrani from Global X ETF. So a lot of interesting ETFs that Global X has put out there, very sector specific. So it'll be really interesting to talk to him about some of the things that Global X ETFs is doing. So hope you stay tuned for that next week. And thank you for joining our show today. It's Justin Nielsen, Arusha Paris, and Chris Gessel. Thanks for listening and watching. And for this week's notes and charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. And make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.